So,
Morning, John.
Larry, if you're an investor, hypothetically, looking at this data line as it might appear in the future, is that an asset? Do you expect it to grow in value over time as revenues grow? How would that work?
Well, I think one of the things that has made these stocks terrific stocks over time, John, is that they've understood how the advertising works. That when you're General Motors or Apple and you advertise on Facebook or Google, you actually can calculate the return on investment pretty clearly. And that is, in my opinion, the driving force of the stock. And I don't think this is going to change that equation. I think this is what they call in kind words a beltway issue, and it's not surprising because this is the third year of the presidential/electoral cycle, and everyone in Washington is hell-bent on keeping their jobs. So in order to do that, they have to show that they're doing something, and this is their something. And as far as mischief can be construed, this is probably less mischievous than a lot of things that they could do. So I think it's onward and upward with these stocks. I think the big risk in them really is Europe is looking like a real problem right now, and that could make the numbers a little less pleasant than the market might like.
Yes, but Lew, is it practical? Because some of this data isn't just specifically where do you live, what kind of cars do you like, etc. It's how often you open Facebook Messenger and who exactly your friends are, where in the country they are, etc., etc. Is it even possible to quantify this in the ways that the senators want?
Yeah, I don't believe so,
John.
I mean,
Facebook
with over 2.2 billion daily active users, it's very, very difficult to pinpoint each user's value. As you know, some users have more value than others, and that creates a real difficulty in implementing this type of legislation. But at the end of the day, I think people need to recognize that while Facebook, Google, Amazon, and the like generate value from their users, I think you need to spin it around a little bit and think about what the value that Facebook, Google, and Amazon create for their customers. And I think, to me, that, trying to come to some sort of equilibrium in that realm maybe makes a little bit more sense. But that is even more difficult to quantify, right?
Larry, if you actually see, I know we're talking about some of the proposals from lawmakers right now, but in general, regulatory risk here in the U.S., if you do see antitrust probes move forward against Amazon, Apple, Facebook, and/or Alphabet, are there companies that are going to be the winners as those investigations unfold?
I doubt it very much. My antitrust, Morgan, once it starts, is a very slow, tedious process, and we're talking about probably, since it hasn't started, a 3 to 5 years to unwind, and in that period, probably you could have 3 or 4 good investable cycles. And antitrust requires harm, and it's very, very hard here to find out who has been harmed, other than some noisy special interests in the Beltway that really don't reflect the public's use or utility for these products. So I think this is a false issue. It gives us something to talk about, but it's not something that you want to change your investment decisions on.